Everyone will be wiped out. Robert Kiyosaki's last warning to all investors. Rich Dad Poor Dad author Robert Kiyosaki expects a market crash and economic crisis and plans to buy gold, Bitcoin, and real estate when prices tumble. Today we're going to talk all about what warning Robert Kiyosaki gave about the upcoming market crash. So watch the video till the end because today's video is going to be the bomb. Welcome to Investor Secret, your daily dose of wealth secrets. If you're interested in everything around big investors and their investment techniques, this is the place for you. Subscribe if you want to stay updated with all the investor secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. Robert Kiyosaki warned investors to brace for a sweeping market crash and painful economic downturn, and signaled he's planning to scoop up several assets once prices plunge, in a tweet on Thursday. Crash and depression coming, the Rich Dad Poor Dad author said. Gold, silver, Bitcoin, real estate will crash too. Ready to buy more gold, silver, Bitcoin, real estate after crash has crashed. He continued, be aware, take care. Kiyosaki has been tweeting about an impending crash for more than a year, so the personal finance guru's latest warning should be treated with skepticism. Yet it's worth noting that unlike some other bearish commentators, he freely admits that he intends to capitalize on the next sell-off, and frames it as a buying opportunity as well as a worrying prospect. The good news is the best time to get rich is during a crash. The founder of Rich Global and Rich Dad Company tweeted in June this year. Bad news is the next crash will be a long one. Unlike Michael Burry of The Big Short fame, who took a knife to his stock portfolio last quarter in anticipation of a market crash, Kiyosaki appears to be snapping up assets even at current prices. I'm buying more gold, silver, Bitcoin, Ethereum, rental real estate, and oil, he tweeted last month. What are you buying? Kiyosaki, Burry, and GMO co-founder Jeremy Grantham are just some of the high-profile commentators sounding the alarm on the current market and warning the bubble is about to burst. Billionaire investors, including Leon Cooperman, Stanley Druckenmiller, and Charlie Munger, Warren Buffett's right-hand man, have also warned the speculative frenzy won't last. Rich Dad Poor Dad author Robert Kiyosaki is concerned that working-class Americans will be wiped out by rising inflation unless they invest in several key assets. In a YouTube video on the Rich Dad channel, the widely known author says that true capitalism has been abandoned, and the government instead intervenes on behalf of banks. The reason they're talking about inflation or deflation is because way back when, in the 70s, a true capitalist would let a business fail. According to Austrian political economist Joseph Schumpeter, capitalism destroys inefficient companies. If you look at one example, not too long ago there was Blockbuster Video. Then Netflix came along and they're toast. They're just gone. A true capitalist wipes out the inefficient or the obsolete. But for the last so many years, since 1907 really, they've been saving the banks. The banks are so corrupt, and the reason the Federal Reserve had to come in was to protect the rich bankers. And what they did was, back in 2008, there was quantitative easing, which is a very complex subject. But basically the Fed just prints money and gives it to banks to prevent them from failing. That's not capitalism, that's Marxism. That's socialism, that's communism. It's called central banks. Kiyosaki warns that unlimited money printing as part of official government policy will eliminate the working class. The reason inflation is going to wipe out people is because the average person is a consumer. Everybody talks about T-bone steak costs this now, and gasoline's this, and toilet paper's that. That's because everything's to protect the bankers, and that's why I feel for the working class people. I think it's criminal that our school system is part of Marxism. There's no financial education in the schools, and it's not a mistake. To the people who are complaining about inflation, just know it's because the Federal Reserve Bank, the U.S. Treasury, they're as corrupt as they come. The author tells his 1.8 million followers on Twitter that the recent 25% price increase at discount retail chain Dollar General is a bellwether event signaling that investors should protect themselves by picking up some cryptos like Bitcoin and Ethereum, as well as gold and silver. Dollar Tree becomes $1.25 tree. Inflation is a tax on the poor and middle class. Inflation makes the rich richer. Get smart, get richer. I'm buying more gold, silver, Bitcoin, Ethereum, rental real estate, and oil. What are you buying? CNN Business reported this week that Dollar Tree cited rising inflation and the ongoing supply chain crisis as reasons why it planned to permanently abandon its long-standing $1 price point on all products. I love Bitcoin because I do not trust Fed, Treasury, or Wall Street, Kiyosaki tweeted last month. Many consider the rise of Bitcoin a reflection of people's growing distrust in fiat money. Unlike fiat currency, Bitcoin can't be printed out of thin air. Instead, the number of Bitcoins is capped at 21 million by mathematical algorithms. Year to date, the price of Bitcoin has already more than doubled. Investors can gain exposure to the world's largest cryptocurrency through the ProShares Bitcoin Strategy ETF. Companies that have tied themselves to the crypto market, like Coinbase and MicroStrategy, present another option to capitalize on the crypto boom. Or you can buy Bitcoin directly. Today, many exchanges charge up to 4% in commission fees just to buy and sell crypto. But some investing apps like Wealthsimple charge less than 2.5% and have extra security features. And there's no need to buy a whole coin. You can start with as little as $1. Many call crypto the new gold, but while Kiyosaki highly recommends Bitcoin, he still likes the good old yellow metal as a hedge against a looming downturn. Gold is the classic safe haven asset. Investors have leaned on it to help preserve their wealth for centuries. In times of crisis, demands for precious metals often goes up. From 2007 to 2009, when the US stock market tumbled amid the mortgage crisis, the price of gold surged more than 60%. You can buy gold coins and bars at your local bullion shop. You can also invest in ETFs like SPDR gold shares. Gold mining companies are another option. When gold price increases, miners like Barrick Gold and Freeport-McMoRan can thrive. Gold has been trading sideways for several weeks. If you're on the fence about jumping in right now, some apps allow you to purchase fractional shares of popular companies. Protecting your portfolio from the ravages of inflation will become vital over the next several years. But you don't have to limit yourself to conventional asset classes to do it. If you want to invest in something that has little correlation with the ups and downs of the stock market, consider a real but overlooked asset like fine art. Contemporary artwork has already outperformed the S&P 500 by a commanding 174% over the past 25 years, according to the Citi Global Art Market Chart. Investing in art by the likes of Banksy and Andy Warhol used to be an option only for the ultra-rich, like Kiyosaki. But with a new investing platform, you can invest in iconic artworks too, just like Jeff Bezos and Bill Gates do. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Investor Secret. Bye.